Imagine for a moment a treasure chest so vast, so powerful, that its contents could lift billions from poverty, build entire nations, yet lies stacked in the vaults of just 1% of humanity. What if I told you that in the last decade alone, this treasure has not trickled down, but exploded upward, leaving the vast majority scrambling for crumbs? Welcome to the largest transfer of wealth in human history. The market continues to underestimate what happens when exponential technologies converge, and that's exactly what's unfolding at Tesla right now. Most investors still price this company as if it's simply an automaker navigating cyclical challenges, but the real story isn't about vehicles rolling off assembly lines. It's about a platform, a technological foundation that is expanding into the most transformative markets of our time. The persistent noise around short-term delivery numbers distracts from what is, without exaggeration, one of the most significant long-term opportunities in the public markets. Look at the trajectory: cost declines, energy storage scaling, manufacturing automation, AI training efficiency, and the rapid maturation of autonomous systems. All these curves are bending in Tesla's favor simultaneously. When technologies follow cost, decline learning curves of 20–30% year after year, linear forecasting becomes meaningless. The market doesn't know how to price that because traditional valuation models were not built for exponential adoption. Autonomous driving remains at the center of this call. Most analysts still assume autonomy will materialize slowly, guarded by regulatory barriers and technical limitations. But the evidence is moving in the opposite direction. Neural networks are scaling faster than anticipated, training data is compounding, and real-world miles, not simulated miles, are unlocking edge case learning that no competitor can match. This is not just progress, it's acceleration. And when autonomy reaches functional reliability, Tesla transitions from a high-end manufacturer to a global mobility platform operating at software margins. That shift alone rewrites every valuation model currently sitting on Wall Street desks. Then there's energy. The market has almost entirely ignored the scale at which stationary storage is about to grow. Grid modernization, AI-driven data center expansion, renewable energy stabilization, these are not optional infrastructure upgrades. They are inevitabilities, and Tesla is positioned at the intersection. Megapack demand is outpacing supply even before the full force of AI-related energy requirements hits the grid. If you believe data centers, robotics, and autonomous networks will grow exponentially, then you must also acknowledge the infrastructure backbone required to power that future. Tesla is one of the few companies building that backbone. The manufacturing story is just as misunderstood. The next generation vehicle platform, smaller, cheaper, and radically simplified, is not a price war strategy. It's an adoption accelerant. When manufacturing costs fall 50% or more through simplified architecture, die casting, robotics, and vertical integration, the addressable market expands by tens of millions of consumers who have been priced out of the EV transition. Disruption always travels down the cost curve. What starts premium becomes mainstream, and Tesla is on the verge of delivering the tipping point product that will take EV from early majority to late majority adoption globally. Add to this the optionality that most analysts refuse to model. Robotics is evolving from a speculative side project into a viable commercial frontier. A humanoid robot trained on real-world data from vehicle autonomy networks is not science fiction, it's a natural extension of a company already leading in AI, actuation, and manufacturing. If that platform scales, the economic impact will dwarf anything the vehicle business has ever produced. The narrative that Tesla is just another car company is outdated. This is a multi-platform technology company building simultaneously in autonomy, energy, AI infrastructure, robotics, and advanced manufacturing. Market hesitations right now look identical to what we saw before previous curve surges in other transformative technologies, first ignored, then ridiculed, later debated, and finally adopted all at once. What's coming next is not incremental. It's a repricing event, the kind that happens when markets suddenly realize that linear assumptions cannot contain exponential reality. Tesla is positioned at the center of that shift, and those who understand the power of convergence know exactly how rare that opportunity is. The market continues to focus on price targets, quarter-to-quarter earnings, and short-term volatility, but that lens is far too narrow to understand what's unfolding with NVIDIA right now. The conversation should not be whether $400 is achievable. The real question is whether the market truly grasps the magnitude of the technological revolution that NVIDIA is powering. Because when you stand at the center of multiple exponential curves rising simultaneously, traditional valuation frameworks break down. NVIDIA isn't merely participating in the AI era, it's building the infrastructure, the intelligence, and the acceleration layers that will define it. We are at the very early stages of what will become a decades-long AI supercycle. Every enterprise, every industry, every workflow is being reconstructed around computational efficiency and intelligent automation. This isn't incremental modernization. It's a foundational rewiring of global productivity, and behind that rewiring lies computation hyperformance, parallel processing computation, which NVIDIA continues to dominate with a lead that is widening, not shrinking. The market still frames NVIDIA as a chip company. It's far more accurate to view it as the operating system of the AI economy. The pace of innovation is accelerating at a speed most analysts still underestimate. Model complexity is doubling every few months. Training methods are evolving so quickly that compute capacity, not data, not algorithms, has become the core bottleneck. NVIDIA is solving that bottleneck at a global scale. The evidence is everywhere. Data centers re-architecting their infrastructure around GPU clusters, cloud providers racing to secure future supply, and enterprises treating accelerated computing as a necessity rather than an optional upgrade. The demand curve isn't linear, it's vertical, and then there's software. This is where the market is still asleep. NVIDIA's CUDA platform, its AI frameworks, its digital twin architecture, its robotics simulation ecosystem, all of these form a walled garden of accelerated development that no competitor has been able to replicate. The switching costs are immense. Once developers, universities, enterprises, and governments build entire AI pipelines on a platform, they don't walk away. They scale deeper into it, and that's exactly why NVIDIA's advantage compounds. Hardware leadership is powerful. Hardware plus an entrenched software ecosystem is nearly unassailable. The next leg of the story is even more compelling. We're moving from single-model AI systems to multimodal intelligence, from static models to real-time generative agents, from simple automation to autonomous decision-making across logistics, manufacturing, healthcare, finance, defense, and robotics. Every one of these sectors requires compute that dwarfs anything built before. If you believe that AI will achieve reasoning, autonomy, or agent-level intelligence, then you must accept that the infrastructure to power that future will be orders of magnitude larger than today's data center footprint. NVIDIA remains the core supplier to that transformation. Energy consumption trends reinforce this reality. Data centers are becoming the new industrial base of the modern economy, and the demand for efficient, accelerated compute will pressure every nation, utility, and enterprise to rethink infrastructure strategy. NVIDIA stands not just as a beneficiary, but as the catalyst. The AI-driven redesign of global power, connectivity, and productivity flows directly through NVIDIA's technology. What the market prices today reflects a misunderstanding, a belief that growth decelerates from here. But when you're building the backbone of a new economic era, growth doesn't flatten, it compounds. This isn't a story about GPU in 2024. It's a story about AI-driven economies in 2030 and beyond. It's about the platforms that will support trillions in enterprise value, the intelligent systems that will operate autonomously, and the compute layers that will drive breakthroughs in science, medicine, transportation, and manufacturing. So when people ask whether $400 is justified, they're asking the wrong question. They're viewing tomorrow through the lens of yesterday's metrics. The truth is far simpler. If NVIDIA continues to sit at the center of AI infrastructure, if the world continues its shift toward accelerated computing, and if innovation continues compounding at current trajectories, then $400 is not the finish line, it's one of the earliest mile markers in a much longer journey. The world is moving toward an energy transition that most investors still misunderstand. They're focused on wind, solar, and batteries, and yes, those will scale. But they overlook the one technology that can deliver baseload power, near zero emissions, and the stability required for an AI-driven world. Nuclear energy is not just returning, it is accelerating. And yet, the companies at the center of this transformation remain undervalued, overlooked, and dramatically underestimated. Markets are mispricing the scale of the opportunity because they're still anchored in outdated assumptions from decades ago. What has changed is not incremental, it's foundational. For the first time in modern history, demand for electricity is projected to accelerate faster than supply growth. Data centers, AI training clusters, electrification of transportation, robotics, smart manufacturing, and synthetic biology. Every frontier technology consumes enormous compute and therefore enormous power. The global grid cannot sustain this acceleration without a reliable, carbon-free, scalable alternative. Nuclear is stepping into that role, and the companies leading this shift are positioned for exponential growth. The biggest catalyst is the rise of small modular reactors. Unlike legacy nuclear plants, these systems are mass, manufacturable, rapidly deployable, and dramatically safer due to passive cooling designs. Their economics scale down instead of up, which is exactly what technological disruption has always required. As costs decline, adoption accelerates, and when adoption accelerates, cost declines further. This flywheel effect is already beginning, even though the market hasn't caught on yet. Uranium producers are seeing demand forecasts shift in real time. Utilities that spent decades overcontracting and oversupplying are now scrambling to secure long-term fuel. Inventories are thinning, secondary supply is disappearing, and new mines face regulatory and geological challenges that limit their ability to scale quickly. When a market faces rising demand and constrained supply, prices don't just adjust, they break out. And companies positioned early in that breakout often see explosive equity performance. Then there are the reactor developers. Their technology is advancing along learning curves similar to what we have seen in other exponential sectors. Modularization reduces construction time. Digital twins accelerate design validation, and advanced materials extend operating lifespans while cutting maintenance costs. These systems are not decades away. They are already winning regulatory approvals, signing commercial contracts, and attracting partnerships with data centers, industrial complexes, and entire nations seeking energy independence. The next frontier is nuclear batteries and microreactors, packed systems capable of powering remote industries, defense installations, mining operations, and even autonomous robotic clusters. As AI and automation expand globally, these microreactors will play the role that diesel generators once did, only more efficiently, more safely, and with near zero emissions. This is not science fiction. It is the logical progression of cost declines, engineering optimization, and shifting national energy priorities. But here's the critical point. The market still values these companies as if they are niche, speculative ventures rather than foundational infrastructure players. That disconnect creates opportunity. Every major technology wave of the last 50 years has followed the same pattern: ignored, dismissed, debated, then suddenly recognized as inevitable. We saw it in semiconductors, in mobile computing, in EVs, in cloud. And now we're witnessing the same pattern with nuclear. The geopolitical landscape further accelerates the thesis. Nations that once resisted nuclear are now revisiting policy frameworks. Energy security is no longer optional, it is strategic. And the companies delivering the next generation of reactors, fuel, and engineering capacity will become central to national priorities. When governments realign around a technology, capital typically follows in waves: subsidies, grants, contracts, guaranteed offtake, and long-term agreements. Many investors still treat nuclear as an old industrial sector, but the reality is far different. This is a high-growth demand pull industry at the early stages of a multi-decade expansion. The companies solving grid-level reliability will benefit not from niche adoption, but from global necessity, and necessity has always been the most powerful driver of technological change. The market is watching the wrong trends. The real opportunity lies beneath the surface, building momentum, ignored for now, exactly where 10x moves typically begin. The world is accelerating toward an energy reality that most investors still haven't priced in. Artificial intelligence is not just a technological milestone, it's an energy shockwave. Every new AI model requires exponentially more compute. Every data center expansion demands exponential power. And the emerging autonomy, robotics, and industrial automation layers will only multiply that consumption. We are entering an era where electricity becomes the new currency of innovation, and the grid, as it exists today, is nowhere near ready for what's coming. That is why nuclear power is stepping back into the center of the global conversation, not as a legacy technology, but as the backbone of the AI economy. The data tells the story. Utilities are revising long-term forecasts up for the first time in decades. AI clusters, semiconductor fabs, and hyperscale data centers are outpacing the grid's ability to respond. Even the most aggressive renewable build-outs can't meet the reliability and density required for 24/7 high-performance compute. The world is discovering a fundamental truth. AI adoption accelerates far faster than solar, wind, or battery deployment. And when that energy deficit widens, the market begins to revalue the only scalable, carbon-free solution that can operate continuously: nuclear. The companies positioned at the center of this transition are moving far earlier than investors think. Uranium producers are reshaping long-term contracts because utilities are no longer managing oversupply. They are preparing for shortages. The underfeeding and secondary supply that kept prices artificially low for years has evaporated. Reactors once scheduled for retirement are being extended, new reactors are being commissioned, and emerging markets are seeking energy independence built on nuclear stability. Demand is rising across every continent simultaneously, and supply remains structurally constrained. That imbalance is the ignition point for the next major commodities and infrastructure cycle. Meanwhile, the real disruption is coming from reactor innovators. We are witnessing a complete redesign of what nuclear can be. Small modular reactors are reducing construction risk, accelerating deployment timelines, and leveraging manufacturing techniques similar to aerospace and advanced robotics. This shift from bespoke megaconstruction to modular mass production mirrors what we've already seen in EVs, solar panels, and industrial automation. When costs drop and scalability increases, adoption becomes exponential. And the companies building these platforms stand to benefit not from incremental growth, but from a global transition. The AI boom amplifies this opportunity. Data centers require firm, consistent power. Even minor disruptions can freeze multimillion-dollar compute clusters. Nuclear energy offers the reliability that cloud, AI, and supercomputing infrastructure cannot operate without. And as AI training pushes into trillion parameter models and multimodal reasoning systems, power demands will climb beyond anything the grid has ever supported. Every facility that wants to remain competitive will need new high-density baseload sources. Nuclear is the only technology positioned to deliver that at scale. Beyond reactors and uranium, advanced nuclear fuels are emerging as one of the most overlooked opportunities. High-assay, low-enriched uranium is becoming central to the next generation of nuclear systems. Nations that once ignored fuel cycles are now racing to build supply chains. As AI drives energy demand vertically upward, fuels that enable faster, smaller, more flexible reactors will become strategic assets in the global economy. What the market is missing is the compounding effect. AI drives higher power demand accelerates nuclear adoption accelerates investment in reactors, fuels, services, and deployment infrastructure. And when industries, nations, and data center operators realize that nuclear is not optional, but essential, capital will move faster than forecasts predict. This is how exponential curves behave. They begin quietly, build momentum beneath the surface, and then suddenly reprice entire sectors. The world is entering an era where energy defines competitiveness. Those who control clean, reliable, scalable power will define the future of AI, automation, and high-performance computing. And the companies driving the nuclear resurgence stand at the center of this structural shift. Investors may not be watching yet, but they soon will, because the AI energy surge will make nuclear one of the most vital growth stories of the next decade.